What's up, guys? Welcome back to the Stocked Society. This is going to be our second video. Today we're going to be covering support and resistances in the market. So get a pen and paper, whatever you need, take some notes, and let's get to learning. All right, guys, so we're going to hop straight into it. First, we're going to talk about supports. So whenever you're talking about a support or you're looking at a support, you're going to want to think of it as a floor in the market. And what I mean by floor is that whenever price comes down for a particular stock, just know that it's going to bounce off of the floor and go back up like a price reversal. So let's say it's in a downtrending market, you're in a downtrending market, it hits a particular point and then it's going to always shoot back up. So let me give you a real life example. Let's say imaginary, stock X, it's at 120 right now. There's a very strong support at 110. Right? A very strong support at 110, and it's at 120 currently. So it's in a downtrending market. It's gonna come down, come down, come down. It's gonna hit 110. And what's gonna happen at 110 is that all of these sellers that were in the market are going to get out. They're going to take their profits because they know that it is a very significant price reversal zone or price reversal point or price in the market. And then it's gonna come straight back up, right? So it's going to act as a floor. So just think of also like a bouncy ball or something like that. So if I had a bouncy ball and I went like this and I just hit it on the table, what is it going to do? It's going to bounce straight back up because what? It's going to what is supporting it? The table, right? The table is supporting the ball from going any lower down. So that's an easy way to remember what a support is. It's like supporting price from going any lower, right? Very simple. And what's going to happen with supports is they're always going to be happening at lower points in the market. Like I said, it's always going to be after a downtrend because for it to come down and actually hit something, it has to be coming downward. So it's a downtrend. So that means that it's going to be happening at lower lows and lower highs in the market. I will leave a visual representation right here, right? So it's going to be happening at lower points in the market. It's not going to happen at higher points because that's what a resistance is, right? So going into resistance, a resistance is going to act as a ceiling. It's going to act as a ceiling. So like I said, the same example, if I had a bouncy ball and I hit it against the ceiling, what is it going to do? It's going to come back down because, basically the ceiling is resisting the ball from going any higher and it's making it come back down. So let's say stock Z is trading at $110. It's currently at $110 and the resistance is at 120. So if it's at 110, it comes up, 115, hits 120. What is it going to do? It's going to come back down because the resistance is resisting price from coming back up. And it's going to come straight back down. So this will be happening basically at the opposite points of where a support will happen. Support will happen at lower lows and lower highs, but a resistance will be happening at higher highs and higher lows. Visual representation right here. So it will be happening at higher points because supports are lower points, resistances are higher points. So support, resistance, because you're gonna need, price is gonna need support for it to stop falling, and then price is gonna be resisted, from going any higher. So that's an easy way to remember it. Just support, floor, or just somewhere price is being supported from falling any farther, and resistance is a higher point, it's resisting price from going up, doesn't want to go any higher. So you might be asking, why are support and resistance so important? Why do I need to know this? It's the stock market, why do I need to know that? Well, support and resistances, they are great entry and exit points. Why? Because support and resistances are always based on historical trends. So with my examples from earlier, let's just say of support, if price is at 120, 120 right now, and it comes down to 110, and we always know, it's going to reverse from 110. The reason why we would know that it's always going to reverse from 110 is because it's happened multiple times before. So what I mean by that, it's happened multiple times before, is that it's happened in the past multiple times, and it's always done the exact same thing from this point. So let's say that let's say that you think that price is at, a support of 115, But, and this is the only time it's ever happened. Let's say it's at 120, it hits 115, and then it reverses. But it's never really done that before. This would not be a valid support because it hasn't happened multiple times in the market before, right? It has to happen multiple times, several times, for it to actually be a legitimate support in the market. Or same for a resistance. Let's say that 120 is a resistance. It's at 110. But it hits 115 right now. You think it's a 115 resistance, and then it comes back down. If it hasn't done that before in the past, it's not a legitimate resistance, right? That means that you probably should not get in right here. And that goes to my next point. Do not get in between support and resistances, because the market can be very unpredictable in the way that it moves, especially with news right now. COVID-19 has been absolutely like controlling, stock prices and stuff like that. You'll never really know what, will happen with price movement if you get into a point that, it usually doesn't reverse or anything like that. So you always want to make sure you're trying to get in at support and resistances. Always try to get in at support and resistances. Like, make sure that it's happened before for you to get in. Do not get in, like I said, if it's just a one reversal that, it's the first time it's reversed, do not get in. Because that means that, there's not a huge probability of you actually being profitable. Whenever you get into a trade, you always want to have like a very high chance of you having profit. Because if you don't have a high chance of having profit, that means that you're risking a lot more than you're willing to gain. And if you check out our first video, I talked about risk to reward ratios. Go check that out. So my next point is that whenever support and resistances, sometimes, like I said, news controls stuff a lot. So let's say it's a resistance at 120 like before, and it's currently at 110. It's hitting 120. It comes down 118, comes back up, 120, goes back down, and then 120 again. So it's like the third time it's happened. On the third time that, price hits a support or resistance, it will always have the biggest shift of momentum. I'll say it again. The third test of a support or resistance, it will always have the biggest shift of momentum. So what I mean by that is that on that third time, the buyers and sellers will flood the market in whichever way they want to do it, right? Because sometimes a support or resistance will be broken. Supports and resistances, historical data, like I said, they're based on historical data, but sometimes, outside factors can basically break that historical data. So that goes into my next point. I'm going to talk about volume just for a second. Volume is simply the amount of buyers and sellers in the market at one time, right? So let's say that, like I said, it's hitting, 120 for the third time. But, I said before, most of the time you're going to want to be selling at resistances. But let's say, for today, a news article was released that a particular stock is doing very well. They just had a merger with a huge billion-dollar company. Investors are flooding the market. They think that that's, it's the best stock for the next 10 years. They have dividend stocks. They're announcing dividends, stuff like that. Just very positive news that will make, price go high, go higher. And then, have investors more enthusiastic of the stock, meaning that if it hits 120 for the third time and it really hasn't broken back down, that means that sometimes it will break, upwards of 120, maybe even shoot to 130, or higher. But that's why you should always be paying attention to trader value. Always pay attention to trader value at supports and resistances, because sometimes trend will break. Oftentimes it will not, but in some instances it will. You can't stop that. The stock market is its own place. There's millionaires, billionaires, retail traders like you and me, trading these stocks, and you never really know what will happen. But if you look at trader value, you'll know what the majority of people are trying to push, right? So like I said, on the third time, you'll be able to gauge if you should actually buy or sell at the support resistance. But always remember in the back of your head that majority of the time, almost 90% of the time, you're going to want to be selling at resistances and buying at supports, because they're always going to be, majority of the time, they're going to be reversing from those points. So my next point, every, price action pattern, I'll give you a short, definition on that. That'll be in a later video as well. Price action patterns are basically just how price moves over a period of time, right? And since it's a pattern or a trend, like I said before, even with supports and resistances, historical data shows that basically these price action patterns over a period of time, price will move in particular directions, right? So what I mean by that is, or how that, kind of ties into supports and resistances, is that every price action pattern will have a support and resistance involved. Every price action pattern will have a support and resistance involved, or support/resistance involved, right? Not going to go too in detail with that, but if you want to look into it, before I release the next price action video, let's say a head and shoulders pattern. A head and shoulders pattern kind of just looks like this. Just a plain, it's going to be going down. But at the top of a head and shoulders, like if you actually looked at a head and shoulders, it's kind of just like actual head and shoulders, right? But the thing about it is that it's going to be having a resistance at the top, right? So price comes up, comes down a little bit, hits a resistance, a very strong resistance, let me say that, then comes back down. So that's just a really quick example, but always remember that supports and / resistances will always be included in price action patterns. So it's always something to look into. Okay, so the last point I want to make is that the supports and resistances will majority of the time end in zero. And the reason why that is because most big institutions, people who are trading with tons and tons of money, some companies, banks, hedge funds, whatever whatever they are, whoever they are, most of the time they'll be trading at zero, because that is a very, very easy point to be trading off of, So just a real life example, the Dow Jones Industrial Index, it's the biggest, the biggest companies in the United States, the 30 biggest, includes some of the ones that, some of the companies that you trade or you see every single day, the people that you buy from every single day. It usually trades very, 34,000. 34,000 was a very strong resistance for the Dow Jones Index, right? So that means that, some of these big institutions and stuff like that, they're always going to be selling at 34,000. For that, just for that pullback that's going to happen, they're always going to be trading at 34,000. So that is just a quick tip to remember that most of these supports and resistances, they'll be trading off of like a whole number with zero at the end. So that's just really easy to remember. So yeah, I hope you all enjoyed the video. This was a really quick video on supports and resistances in the market. Just always remember that a support is a floor, a resistance is a ceiling in the market, and basically do not get in between these supports and resistances. They should be your entry and your exit points. Do not get out even, at in between the two, because, that could lose, you could risk losing your money, or, just a bunch of other things that you just do not want to happen. But just remember, entry, exits at supports and resistances, whichever way, uptrending or downtrending market, whichever market that you're in, just perform your due diligence. Just make sure that you understand the market that you're in, and always just be really safe and increase your profitability or your probability of being profitable, by trading off of those points. So I hope that helped a lot. This is the Stocked Society. I'm gonna leave a link to my, my email, my information in the description below. Shoot me an email if you wanna, join the Stocked Society. We're always, just going hard. We're trading stocks, forex, crypto, everything. In later videos, I'll, include a little bit of forex, foreign exchange and cryptocurrency. So just stay tuned, like, comment, and subscribe. Peace out.